two facilitators. We have two facilitators for today's class, Mr. Femi Olarinde and Dr. Zaid Abubakar. So they will then take over and take us through the session for today.
Nigeria, we hail thee, our own dear native land. Though tribe and tongue may differ, in brotherhood we stand. Nigerians all and proud to serve our sovereign fatherland.
We'll take the third stanza as our prayer. O God of all creation, grant these our one request. Help us to build a nation where no man is oppressed, and so with peace and plenty, Nigeria may be blessed. All right. Over to you, our facilitators for today. You can take it on from here.
Okay, thank you very much, Chairman. I'm glad to be here. I'm glad to be facilitating today. And quickly we'll be going to what we have today. I'll be sharing my screen from here, since I've been given the access to. So, okay. Okay, so today we'll be speaking on, and good day everyone on this call. Let me first acknowledge everyone who have joined. We all know the essence of this program is to build champions of the reforms and to give us very in-depth understanding of what the reform is. And I'm sure we have gained a lot of knowledge from when we've started. And today we'll be talking just about, we'll be going a bit in-depth, trying to analyze some of the key changes with regards to compliance. What have changed, what is remaining, what has remained the same in terms of different tax type, from personal income tax to companies income tax to value-added tax, capital gains, the structure for informal sector and presumptive taxation, harmonization of levies, and all what we are talking about to make our tax system better. And like I've mentioned this, and what communication should will be taken outside there with regards to the reform. Nigerian tax system was modernized under this reform, and the key goals still remain harmonization, simplify compliance, modernize digital administration, and ultimately to encourage investment. And we know that when investment is encouraged, Nigeria can earn that revenue that we so desire to fund infrastructure. And this presentation will give us some breakdown of the thematic themes and highlights of compliance responsibility. Let's go first into the Personal Income Tax Act. What has changed? Today, we have a table of tax rates, and we know that the Personal Income Tax Act intends to provide a progressive rate for which persons earning individual or persons earning income will be taxed on. Progressive, and how progressive is the band we have today? First 300, looking at 300,000. In the income people earn today, it's actually a very small income. And so what has changed? The band rate, the program has changed from what we have today to the new one. So if you look at my system, you'll be seeing one in orange color, while the other one in green, which is what we are migrating to come January 2026. And now we've heard a lot of narrative about people saying your first 800,000 of your income is no, people earning 800,000 are now tax exempt. That is not what the law is saying. The law is saying the first 800,000 of everyone's income. So it is not only people who earn 800,000 and below. The first 800,000 of our taxable income, not just even income, taxable income is now, okay, let me put on screen, is now charged at 0%. So because by today, every part of our income is charged. So if you earn a zero naira, one naira today, it will charge at 7%. But except the provision which was brought about by the Finance Act that exempt minimum wage. So what it still means is that every income today is chargeable at 7%, except for the specific exemption in the law. So, but right from the new band rate, it's only from 800,000 of our taxable income. And if you do the mathematics today, before you get to 800,000, your income must have also been charged to what we call the reliefs. And what are the reliefs? We have the National Housing Fund relief. We have the Nigeria Health Insurance Scheme relief, NHIS. We have the what we call pension. Your pension contribution is also relieved from your income before it's taxable. Now, we are also allowed to take up a life assurance. Life insurance for a person and that of his spouse is also allowed to be taken, and as a relief for before such income is taxable. And this is to ensure that Nigeria is one of the countries that do not actually tax pension at all. So some tax pension when you collect it, some tax when you save, some tax the pension even in the hands of the PFAs. But for Nigeria, we exempt it all through. And well, it's a good thing to enhance our pension scheme and to ensure Nigerians, after retiring, do not suffer. And so this is a good one for Nigeria. Now, also the progressive rate having moved from 0 to now 25%. Before it was 7 to 11 to 24%. Now the first 800,000 of your taxable income, again, like I explained, having deducted all the reliefs, will now be chargeable at 800,000. And one of that relief that have been introduced is what we call the rent relief. The rent relief is a 500,000 naira or 20% of your income, and 20% of your income up to a cap, a maximum of 500,000 naira. So what it means is that either 20% or 500,000, whichever is lower, depending on your income. So and what does it mean? It just look like government giving you a relief from your rent of 500,000. You are allowed to take this away from your chargeable income before it is charged to tax. And when you look at this new table of tax rates, there's been a lot of debate. Even some have said, "Oh, you said 800,000 is not chargeable to tax, but minimum wage is even more than that." So, as I explained, it's taxable income and not the normal annual income, which means before you get your taxable income, you must have taken away your deduction, and before you get 800,000 taxable income, you must have earned roughly around 1.2 million. And so we need to get this straight. So when you look at this table, if you are earning about 15 million thereabout or a little over, your tax will reduce. So you can try the computation. The Presidential Fiscal and Tax Reform Committee on the website have provided a calculator which makes it easy for everyone to calculate. So we can try this. Then a little over that, maybe 20 million about and above that, may keep your tax almost at the same thing for today. Then, when you have a taxable income that is above 50 million, that is when you now, the excess of it may be chargeable at now 25%. And when I explained this, I remember the policy direction by the president that says we should tax prosperity and not poverty. So this this is one of the things we could connect with that. I'm sure that even everyone who earns this class of income will agree. And we look at minimum wage. Minimum wage earners too are now also exempt from this from income tax to allow them grow in line with government directive of government policy of not taxing poverty but prosperity. So those earning minimum wage could grow. And let's go into those changes for corporate incomes too. So when we look at businesses, business have now been structured into two. So we have a small business and we have large business. So irrespective of the structure that this business comes with, mostly under corporate taxation, we talk about companies. And now we have the classification of small being a business with a turnover of 100 million and below, and large, which is over 100 million. And what is the tax rate? For these small companies or small business are chargeable at 0%, while the large remains at 30%. However, there is a provision in the law that allows the president to reduce this rate to 25%, which we believe this will be used soon to support business growth in Nigeria. And we have what we call the earmark taxes. The earmark taxes are what we call today the likes of the NITA levy, the likes of the tertiary education tax, which we most commonly call education tax. We have what we call the police trust fund levy. We have what we call the NASENI levy, and many more. We noticed that many more were still coming up. There was an introduction of the cybersecurity levy. There was an introduction of some other levy from the armed forces. So instead of reduce this proliferation of taxes, earmark taxes, the committee in its wisdom introduced what we call the development levy, which harmonizes every earmark tax that government wishes, government has introduced and may wish to introduce. What does that mean? That whatever is being introduced should be within this development levy, and the rates that will be shared will not be more than 4% on income. So on corporates for companies. So if you look at what we have today, if you add them together, it's actually above 4% rather. It's above 4%. So, but this consolidation helped to reduce this tax down for companies. And also what has also changed? Minimum tax. Today, government, one of the policy brief is that we should not tax the seed, but we should tax the fruits. So looking at taxing the fruits and not taxing the seed. When companies, the rule that makes companies pay taxes even when they did not make profits, or when it seems as if when the profit they make or when the tax they pay is lower than minimum tax, has now been repealed. So what it means is that everyone who does not make profit, taxable profit, I mean, will not pay a tax and will not pay minimum tax. That is what I mean, no income tax. So no minimum tax. So minimum tax has been said to be tax on capital. So this is no longer going to be applicable from next year. And there is an introduction of something we call the effective tax rate. And why? I know there may be questions that, you're stopping minimum tax on one hand, but you're introducing something called an effective tax rate. And why? One of the principles of this reform is globalization. As in Nigeria is not an island. However, we are also ensuring that our cross-border relationship and cross-border businesses, Nigeria do not suffer or do not lose its tax sovereignty. And so, if you are following the discussions around the inclusive, the Pillar 1, Pillar 2 at the OECD inclusive framework discussions on taxation of challenges of digitalized economy. There is a discussion on Pillar 2 that seems to introduces a 15% minimum tax, which means if MNEs or companies do business in your jurisdiction and they do not pay tax that is up to effective tax of about 15%, they will pay the balance to the parent company jurisdiction. And so, why having granted so much incentives in Nigeria, most companies' effective tax rate is still under 10%. And so, and in order not to lose most of this, not to lose our tax sovereignty and not to lose our taxing right, we had to there's a new introduction of what we call the effective tax rate of 15% on MNEs, and not just all MNEs. The one with a global turnover of 750 million euro. Another large company, in order not to be seen as being discriminatory, because one of the principles of taxation is equity and fairness, and so there is a mirroring provision that also applies to all large companies with a turnover of 50 billion, gross turnover of 50 billion. And these are some of the changes to corporate incomes. And also, we have a new regime for taxation of capital gains. So as here, a lot of people talk about, capital gains is now 30%. But I have another narrative. For me, I believe what we have now, we do not have a tax called capital gains tax again. Before, when you want to list taxes in Nigeria, you're going to list something called capital gains tax. And right now, we no longer have a tax called capital gains tax. So I say we no longer have capital gains tax. However, we have tax on capital gains. And what is the tax on capital gains? We now have an harmonized income tax, identifying all income as same, whether they are from profit of your operation or whether they are gains from disposal of assets. So we all know what profits constitute. So it's just the difference between your income and expenditure, the excess of income over expenditure. So if it is classified as profit or as gains, irrespective of what it is, they're all income. And since the law, what we have is taxation of income. Even today, what we have is companies' income tax. So it means that it's both income is taxing. So that means all income are now harmonized as one and taxed as one. So what is the implication? Of course, when this happens, there are implications. For a company, if the company is under the threshold classified as small companies, it ends up as no tax to pay. So it's taxed also at 0%. And if the company is a large company, it will be taxed at that rate, which is 30%. And another thing that's changed, before today, you cannot take losses from your operations from the gains of disposal of assets. And now, if you are, let's say, because we know a lot of people who do business and they have operational loss from their business. However, they dispose assets and make gain. And what the law was saying before, you cannot take that loss from your gains of the asset, from the disposal. But now, because of the harmonization of income, even harmonization of losses is also there. So you can take this. So these are some of the things that have changed. And so we need to note this. And for clear, so when, as we as professionals, as we teach people, as we talk about this, we need to get it from the right perspective. Now, going further to capital gains tax, the CGT capital gains now is taxation of capital gains now is broadened to also include what we call digital or intangible assets. Yes, before now it was not exempt. However, there's been a lot of call on the non-clarity of taxation of this class of asset, digital asset, virtual asset, and so now the law provides a framework for taxation of this class of assets. The law also allows, I've heard people say, oh, government is interested when the man disposes his cryptocurrencies and other assets, and they say they hammer because what we hear over the news or over the social media, somebody disposes a crypto and they say, oh, Ethereum has increased today. Whatever NFT, whatever the name is, has increased, and so somebody makes just hammer by disposing few of them. Next thing, government is interested in the tax on the gains. However, we do not hear when people lose. So the law is now clearly recognizes the losses as well as recognizes the gains. So where there is loss, it's allowed to be recouped from this class of assets, and also the gains will be taxed appropriately. Also, there's a framework that ensures that crypto operators report to government, provide adequate returns, quarterly returns on their operations. It also provides all forms of returns on for different purposes, for fraudulent transaction, and also there's been a lot of KYC. There's a lot of ways to check when to also help check when these assets are used for other nefarious activities. So there are clearer exemptions for primary residences or asset classes. There's allowable loss relief, which I've explained. There's incentives for disposal of shares. Now, disposal of shares is exempted to the extent if such shares are reinvested. So irrespective of how much, any amount that is disposed, once it is reinvested, it is outrightly exempt from tax. However, if you also dispose up to 150 million and the proceed is not more than 10 million, this amount is also exempted. If it is more than this, the excess, and this is annually, I'm talking about annually. If it's more than this, the excess over this 150 million will be charged to tax. Now there's enhanced reporting of gains or shares disposal, digital asset, which I've explained, and business transfers. CGT returns must also align with income tax because it's already harmonized. So it's a single returns now to ensure the harmonization works same. So let's move on to value-added tax. So what we should get is that these are some of the cogent changes that have happened. We may also discuss further those other ones that we may not mention as we go in. We will discuss them also maybe in passive or as we go, but these are critical and we need to know this. For value-added tax, VAT rate remains at 7.5%. Input tax now, before today, well, the concept of input and output VAT is a very critical part of VAT. World over, if you go to many parts of the world and you say Nigeria has VAT, many times they've questioned our VAT model. I remember I was part of a meeting with was it the IMF or one of them? And when we were talking about VAT, the man was talking about input and output, and we told him about the restriction to goods purchased for resale, as provided under Section 17 of our VAT Act. and goods purchased for goods that form raw material to production of other goods. That this was the restriction for impute VAT claim, and it was surprised. However, we all know that this was what has kept our rate at what it is. But our reforming things is now changing. We are reforming also this VAT model. And so today, by the time we transit into the new reform, all input tax are now claimable, or whether it is on fixed assets. Today, fixed assets, VAT on fixed asset is expected to be capitalized. And what does that do? It increases the cost of this fixed asset. Also, overheads, VAT you pay as a result of overhead. So if you run an operation and you pay transports and logistics, you buy electricity, you pay for water. No, water is exempt now. You pay for certain things that you use. They are all chargeable to VAT. And all these things classify as overhead. The VAT cannot be recouped except you convert them to part of your costs. What does it do? It increases your cost of production, and at the end of the day, it will increase the price of goods and services. Also today, companies that are into providing services cannot claim impute VAT because the service, what the law says is that goods purchased for resale or goods purchased for the production of another good. So when you purchase goods and use it to provide a service, it is impossible to claim the impute VAT under our present law. So the reform has now allowed everyone to be able to recover the impute VAT from the output VAT collected. And so this will create, so we should look at this. This is one of the biggest part of the reform, which government, in fact, is a big sacrifice for government to be doing this, even at this time, considering the extent to which this will be. And I want to use an analogy. Imagine an hotel that builds like a 10-story building, and the input VAT that must have been charged in the course of developing that hotel. I want to also think about how long it will take that hotel to recoup that VAT. And so what does it do to government? We need to also consider this government. This is a very big sacrifice, because this will actually help business to grow. It will help business cash flow, and it will help their cost of production, and ultimately supposed to affect pricing, to provide affordable pricing. And so this is essential to note. There's now a new legal framework for what we call fiscalization and e-invoicing. What's fiscalization? It's just a way of using electronic to make our transaction transparent. And so the e-invoicing system, government is now developing an e-invoicing system that ensures that taxpayers issue an electronic invoice. Today, under Section 13A of our VAT Act, the law compels, or the law mandates everyone to issue a tax invoice. And this is to ensure that everyone who carries out business transaction issues an invoice, and this invoice is the beginning of record keeping and documentation for everyone doing business. But we know that it's not in the habits of many Nigerians to even demand for invoice, even those who give. And many times invoices can actually be also manipulated. So what are we now doing? Our government is now introducing what we call e-invoicing, This is to provide transparency in the system, and also it will, as much as it will make businesses transparent, make transactions very accurate, it will also reduce the risk for even taxpayer. It ensures that even things like audit risk and the rest will be reduced for taxpayers. It improves the transparency of taxpayers' business too. And it improves trust between taxpayer and the tax administrators. So we are hoping that e-invoicing, the success of this invoicing, will even reduce the numbers of audits and the rest, because tax authority already have that information. And so it makes things easy. So there's a legal framework for that. And government now saying that because we already have access to most of the transactions. So where there is an instance for tax refund, VAT refund specifically, that refund should be made within 30 days. This is also a change in our taxing regime. We all know that for a refund claim to be made, the law also stipulates that the tax authority, the tax administrator, will ensure to conduct an audit, which we call special audits, to ensure that such person who is claiming a refund is not owing government in any way. And most of the time, I will say from experience, most of the time, when this audit is conducted, many times the taxpayer end up being the one owing rather than government paying. So, however, because this VAT becomes almost like a special case, and people have a refund, government is saying, okay, I won't bother with the audit again. We will pay this. And why is government paying? So it will improve the business cash flow until when it is due for its routine audit or annual audit, whatever the case may be. Also, we could check later. The tax authority can check later to ensure. Now, the government is now saying, because of this new refund system, how people will say, oh, how will it work? Because there's been a lot of discussion about, there's a lot of complaint about no funding for refund and the rest. And there's a provision in this law that also ensures that there is funding for the refund. The law mandates the Accountant General of the Federation to set aside fund for refund claims before sharing. So we all know that VAT is shared on monthly basis by the FAC, which we call the Federation Account Allocation Committee. So the law is now saying that before that VAT is shared for the month, FIS must have submitted a schedule of VAT refund claim. And these claims should be settled, or this claim should, the amount due to this claim should be set aside before sharing the balance to the parties to the federation account, which is the federal, the state, and the local government. And so, or parties to the VAT pool account, rather. And now, because government it has now given a lot of trust to taxpayers, but there's a penalty to deter those who may fraudulently want to claim VAT. So, including blacklisting or prosecution for frauds and fraudulent claim. So we need to know this and ensure, and we can pass this message on as we teach. Now, small businesses with a turnover of 100 million or less is also relieved of the obligation of VAT. So such small business, in addition to being charged income tax at 0%, is relieved of the obligation of VAT. And when we say obligation, this includes not collecting VAT, includes not filing VAT returns. And so until such a turnover of the company or business gets to exceed 100 million. However, there is also a clause that allows the small businesses to opt to collect the VAT. And you may ask, why will someone who has been relieved of an obligation opt to do it? For businesses, it could be an additional cash flow for them, because when you collect government VAT and you have to keep it for more than a month, because let's say you collect VAT on the 1st of January, you have till 21st of February to remit it. That's even more than a month. That's almost more than 1.5 months to keep such money. And so you could turn such money over and make some income on them. And so these are some of the benefits for businesses that would like to opt to. However, since you have opt to collect, all sanctions, all that applies to those who collect and fail to remit will be meted on such if we apply to such if the person fails to. At that point, you will not be able to say, oh, I am not supposed to collect in the first place, so the sanctions are not supposed to apply to me. So we need to be guided and provide this information. Now, also talking about VAT, some of the information we need to pass out is that the classes exempt. We have a whole lot of exempt products now. We have about 13 classes of them. And when I say classes, even from one class, you have many products. Let's say goods. So first of them, goods for use in humanitarian donor-funded projects. This includes goods you use in NGOs, goods used for charitable organization, goods used by churches, mosques, and the likes of them that are in the same class, where humanitarian donor funded. So even including cooperative societies and other friendly societies. So the goods used to foster to foster that which this organization were set up for were exempt from VAT. Also baby products. All classes of baby products, so far they are confirmed to be used by the baby, are also exempt. Locally manufactured sanitary pad and sanitary products rather. So whether it's pads, tampons, it's towels, sanitary towels, all of them in this class are also exempt. However, they have to be the locally manufactured one. And we all know why it's limited to locally manufactured. This is just to ensure that we encourage local production. Also, public transport service is also so exempt. So public transport service does not include the executive rights that we have. And so this is also ensured we have affordable transport services. Land or building is also exempt from VAT, or interest in land and building. What is interest in land and building? It's simply renting an apartment, renting an accommodation. So when you pay money for a rent, for an accommodation, it is not also chargeable to VAT. Then we have zero rates. And I'm sure some people will already be nursing the question of what is the difference between zero rated and exempt. Now we have over 18 classes of also items that are zero rated. And we have the basic food items. Basic food include all kinds of food produced, agricultural food produced. So these are not what we call packaged meals, packaged food. Also, we have all medical and pharmaceutical products and services are also zero rated. Now, we all have educational books and materials and tuition for nursery to tertiary education are also zero rated. Fertilizers and medicinal products, including herbal products, are also zero rated. And let's talk about the concept of exemption and zero rates. Exempt is outrightly exempting a product from VAT. But zero rated simply means that even when such product has been exempted, what it means is that there will be no output VAT for such product. And so for those who could have incurred input VAT are left to just capitalize or include the VAT they have paid on their price and to recoup it from the price. However, for zero-rated goods, let's say basic food items, using a farmer incurs VAT probably in the course of before farming, before producing, as in the course of producing the goods. The VAT may come from haulage services. The VAT may come from hiring professionals. The VAT may come from other class of services, direct services to either the farm or the process of the farming. And now those VAT cannot be recouped because the outright product, the product that is developed is unexempt or is not chargeable to VAT. But for zero rating, this VAT that has been so incurred as input is now allowed to be claimed. And you may say, how can such claim when it has no output to collect? So if such business have multiple products, and if they have product which they charge VAT, they could recoup their VAT from the other product, agricultural product, even from the output from the new product. It forms a credit for them, which they can use to offset other VAT that may be chargeable. And also, now you can apply for refund. I haven't explained how our refund system works now and how transformative we believe this refund system will be and to the benefit of Nigerians. So I'll move on to, okay. Now my system is, okay, good. Now we go to informal sector and presumptive taxation. So Dr. Zaid is on the call. Dr. Zaid is the executive chairman of the Kano IRS and has also been part of this. So I will bring him later to speak to us more about this aspect of taxation. Or if you can save all your questions for him when that time is. But I'll take the presentation now. Under Section 29 of the Nigerian Tax Act, it provides for a presumptive taxation. And what is presumptive taxation? This applies where a person's income cannot be accurately determined. Don't forget, as one of the obligations for every business is to keep proper books of accounts. But we know there are classes of business, such as what we call informal sector, the informal business. Some are truly informal, while some are probably, like I say, masquerading around the informal economy. Now, those proper formal ones, we know we have businesses. You can have organizers, you can have mechanics, you can have traders with small mini marts and the rest. Don't forget that taxation, the law, Section 24 of our Constitution, mandates everyone to declare their taxes truthfully and pay to the rightful agency of government. And so what it means is that no one is actually excluded from this provision. And so this presumptive tax is to look at the income of every individual. And this is under the purview of the states, according to the personal income tax today and the NTA, which provides for taxation of income of persons, which is under the purview of the state. And this tax is assessed on presumed income basis, mainly for the informal sector. And how do they presume? So this assessment relies on objective indicators such as nature of business, turnover estimate, and industry benchmark. So it's always out of a research that has been done to determine the class and to determine what obtains. And it's also not just done at a blanket. So they use the location, use demograph of businesses around there to also be able to structure the benchmark, to structure the industry, what applicable in the industry and in the area. So these are some parameters used in developing the presumptive tax document. Then the Minister of Finance is empowered to provide, to prescribe a regulation and on the basis, on the advice of the Joint Revenue Board, considering that this revenue belongs to the members of the state IRS. And so it's expected that the Joint Revenue Board, which is a coordinating body of all the tax authority, advises the Minister of Finance on the development of the regulation for presumptive tax. And what the presumptive tax aims to simplify compliance and broaden the tax base without undue burden. And so the new presumptive tax regime is looking at even using applications of mobile and digital platforms for declaration, and looking at thresholds to design to reduce compliant bodies or even small operators, that is segregating into what we call nano businesses, small businesses, and also within that, so they could also have some reliefs. Also, businesses are also expected to register to also obtain tax ID. That means recognition. So identification of such business is also a key factor. The presumptive tax liabilities may be paid through other simpler version, of course, to make compliance easy. Mobile channels and bank apps are also channels for remitting. The JRB is already working with the State Internal Revenue Services to develop a presumptive tax regulation, and it's expected that very soon there will be one. There are not just one. We know many states have one today. Many states have, but in the spirit of harmonization and in the spirit of having a unified and standardization of our tax rules, the JRB will be advising the minister on developing a presumptive tax regulation that could cut across all states in Nigeria. Now, harmonization of taxes and levies. Today, we have a law called Taxes and Levies Approved List for Collection Act that lists a lot of levies collectible by different states. And there was a time where there were some level of harmonization that did not pass through even some of those laws that were put there were not enacted by some states. And so there was an abolition. The court attempted, there was a court judgment that abolished the law. And so where are we going today? Multiple and minor levies are now consolidated under a unified framework to reduce multiplicity. So there's been a discussion around states and local government trying to harmonize and reduce the tax heads, and so to help businesses, to help businesses. And many times, it's not even the number of taxes that brings more revenue. It's just about having an harmonized one with a good rate to help. Overlapping state and federal levies also are streamlined. Within the states, Some states want to collect taxes that federal collects. Aside that, even within the federal government, many agencies, multiplicity of, I'll call them tax agencies, because when you collect tax, a multiplicity of revenue collecting agencies, let me streamline to revenue collecting, so are now being harmonized to ensure that taxpayers can comply with fewer provision. Elimination and duplicative of collection mechanism. And this is what I'm explaining. So why we can collect these taxes at one point rather than many points to ensure it also helps to be able to have transparent tax system. And also, what are the compliance? Taxpayers receive clearer obligation and fewer overlapping filing. Because you needed to deal with multiple agencies, there are also multiple documentation, which will also disrupt taxpayer. Compliance now focuses on uniform standard across the jurisdiction. So this is clear. The next slide. What are the repealed and amended legislation, including those that have been suspended by the development of this tax reform? By 11 acts, every tax act or related tax and related act have now been repealed, and they are listed as follows. Also, there has been consequential amendment to some other laws that impact tax. So when we ask how many tax laws we have today, it's difficult to even know, even those of us who have been practicing, who have been reading tax laws for a while. And why did I say we don't know the number of tax laws? Because when you look, there are many agencies that have taxing provision in their law. And so having harmonized, many of those laws will be consequentially or have been consequentially amended, because when you take something from one law, you already amend it, or you delete that provision in that law, you've amended it. And also, by the time this law has also suspended VAT on some products. We spoke about the exempt, and we spoke about the zero rates. But there are some of them that are neither exempted nor zero rated, but however suspended to help those dealing in them, and to help the entire Nigeria, to help that product, making that product a form of priority for the government to develop and to make it affordable. That is basically making it affordable for people. And these are petroleum products, renewable energy, equipment, compressed natural gas, CNG, liquefied petroleum gas, LPG, and other gaseous hydrocarbon. And also, all harmonized taxes, I've explained this, all taxes provision in all laws have been harmonized under the NTA and NTA. Also, development levy, as I explained, is harmonized. Next one, what is remaining? The law cannot change the fundamental principle of taxation, and also the fundamental principle of tax registration. Before today, everyone is expected to register and obtain a TIN. That is what the law is. Now, what has changed in that respect? The nomenclature, or the word, what we call TIN, have now been changed to tax ID. And what is tax ID? It still means tax identification. But now it's not just a specific number. So there is a framework to ensure that we obtain what we call a tax ID. And this is a concept that allows government being able to harmonize all unique identifiers, irrespective of what they may be, whether your NIN, your TIN, and all the number for companies can even be your corporate affairs registration number, what we call the RC number. So it's to harmonize this and for ease of identification of taxpayers. And so the concept of the principle of tax registration still remains. And also the definition of income. still remains. We all know what constitutes an income, whether we call it gross income, we call it gross turnover, we call it gross emolument, we call it, some say, earned and unearned income. At the end of the day, they are all income. So these definitions of income in totality is still applicable. It's still the same thing. Yes, we may have different composition of the income, which can change from time to time, from business to business. However, the concept of income and the definition still remains. Taxpayer obligation remain. And what are the obligations of taxpayers? Obligation to register, obligation to file returns, obligation to, I list quite of them, compliance requirement, obligation to register and obtain a tax ID. And this is both for persons, and when I say person, whether natural or artificial person, natural person in terms of a biological person, a person, or artificial, which include corporate entities. Also, the registration include MDAs. Government agencies are also expected to register. Non-residents, whether company or individuals, are also expected to register for taxes, for register in Nigeria. Also, one of the compliance requirements is also notification of change of address. And change of address includes maybe change of email address, change of phone number, change of information in totality. Yes, because we're going digital, all this information other than not only the physical location of address is required, but both email address, phone number, and every contact is expected to be notified. Another requirement is a maintenance of books of accounts. This is clear. Periodic filing of tax returns is also a compliance requirement which remain, and the use. We have another requirement, which is the use of fiscalized devices and e-invoicing, which I had explained earlier. Tax incentive returns is also a new one, which is a compliance requirement for businesses who enjoy tax incentives. They are expected to file tax incentive returns, and except where such incentive award is generally applicable. Quarterly returns to be delivered by bankers. So if bankers are expected to deliver quarterly returns for individuals with a turnover of 25 million or individual companies with 100 million. So there's a mandate for bankers to deliver such return. Returns for virtual asset service provider is also expected to be submitted for those who are in the business of virtual asset. Disclosure of tax planning schemes for businesses that intend to do a tax planning. The law now mandates a disclosure. So it could, such person, a company can be advised appropriately. Accreditation of tax agents in order to sanitize the way tax agents conduct or use even the tax tax administration system, and also represent the agent to also maintain some level of credibility and the rest. There is an accreditation of tax agent. And transition provisions and timeline. Of course, transition periods provided for e-invoicing and digital system. FIS is already deploying, and FIS is facing this in line with transition, so everyone is not bugged with onboarding onto the e-invoicing. Not just because of people, also it takes the tax authority to be able to contain and accommodate everyone. So there is a phased approach which has started already. Also, there's grandfathering rules for existing assessment under the old status. So this is to ensure that our businesses as they are transiting the issues of maybe losses carried forward, issue of capital allowances, and the rest. The law provides for how the treatment is going to be. Compliance deadline for taxes type and presumptive tax. These are actions to be noted by taxpayers about deadlines which are clearly stated in the laws. All these systems and processes against new requirement is expected for businesses to also look at their system to ensure that it conforms with the new. So we could point businesses and people, advise people when we speak to them, and it's expected that our accounting system is also updated to ensure it conforms with the rules guiding the implementation, especially of the fiscalized device and the reporting schemes of the tax administrators. Communication and training message. How do we need to communicate that this change affects what we report and not whether you pay tax. So for those who probably maybe charge tax at 0%, it does not mean that they will not file returns. So we need to take the information out in order for them not to fall short of their obligation. Returns filing is critical, and this is the only way tax administrations can know that such persons are still under the threshold. And I think we should focus, Nigerians should focus on benefits of the tax reform. Enough of the brouhaha and the social media analysis. And let's focus on the law that provides predictability, transparency, and digital convenience. And also messages you send out should be clear about income tax reliefs for MSMEs. We need to provide clarity on structured taxation rules for informal sector operators, professionals, and corporates to note the new compliance requirements, exemption of profits of NGO, even educational institutions, faith-based organizations to help drive this, because we've heard a lot of narrative, even from faith-based organizations, thinking that their revenues will be taxed. Some have even asked, oh, the money they pay, their tithe and offering that goes into their bank account will now be taxed because government wants to tax bank account. We need to also ensure we take this news, these messages out appropriately. Government and MDAs are to collaborate to ensure this works well. And we need to manage resistance, fear, and political narrative. It's obvious that it's easy to score political points sometimes. We need to look beyond and look at the high points, the benefits of this reform. So for we to take out that message, we need to just look at the benefits and look at where we are today, where are we going to? And I think that is my last slide. I say thank you for listening to me. I'll be on the call. Alhaji Zaid, Dr. Zaid is also on the call. So for those questions that pertain to his area of expertise, and both of us can answer the question, we are welcome to answer them. Thank you very much for listening.
Thank you, my brother. Thank you, Mr. Femi, for, I think you virtually covered almost everything. I'm finding it difficult to even say, to add to what you have said already. However, I think you've drawn my attention to the areas of the presumptive tax.
Okay.
Am I audible? Sorry, can you hear me?
Yeah, you are. Go ahead, please.
All right. Thank you. So just to add to one of the slides that you mentioned, the presumptive tax, the Presidential Committee, together with the Joint Revenue Board, have developed a regulation to that effect, looking precisely at Section 29 of the Nigerian Tax Administration Act, that empowers the Minister of Finance, under the advice and recommendation of the GRB, to issue that regulation. Specifically, that section 29, is talking about individuals whose income cannot be ascertained for all practical purposes. So the provision of Section 29, which gives birth to the development of the regulation, applies to this kind of businesses or individuals whose income cannot be ascertained easily by the Revenue Authority. When we say people or businesses whose income cannot be ascertained, in most instances, we attempt to make the mistakes that these businesses are all the informal sector businesses. No. There are businesses that are formal, but for one reason or the other, so in some cases, deliberate reasons, they make their accounts not to be easily accessible by the Revenue Authority or tax officials. We also tend to make the mistake that some of these businesses are not the ones registered with Corporate Affairs Commission. So the new regulation has covered all the areas that we can imagine, that we can think of, that will render a business inaccessible or the income not to be determined easily by the Revenue Authority. So I know the regulation is going to come out and is going to take effect 1st January 2026. It's not readily in the public domain, but I know as soon as the minister signs, that will be made available. So the presumptive tax also has some income threshold. The income threshold is between 0 and 12 million based on what I've reviewed in the document. So any income for a business that is within 0 and 12 million is exempt. Any amount be above 12 billion or 12 million, 12 million and 1 naira will be subjected to presumptive tax regulation. However, the regulation also provides an exit rule. If a business determines that the presumptive tax is not really fair to them, or they are no longer interested in being assessed on the basis of the presumptive regulation, they may decide to exit from that regulation, and they will file their income, or they will file their returns in line with Section 11 and Section 13 of the NTA. That is Section 11 if it is a limited liability company, and Section 13 if it is an individual or enterprise. That is where the company or individual decide to exit from the presumptive tax regulation. The registration procedure or the registration form for presumptive tax individuals is made so simplified. This is aligned with Section 15 that encourages relevant tax authority to issue simplified, filing procedure or regulations. So it is made so simple that with a click of a button, if it is an automated system, you can render your returns. Or with dialing of some shortcuts, you'll be able to render your returns. This is aligned with Section 15. And this is also contained within the regulation as it will be issued by the minister, I think, very soon. But there are also exemptions under the regulation. Companies that are exempted or taxable individuals exempted under Section 163 of the Nigerian Tax Act are also exempted from the presumptive tax regulation, which means that there isn't any clash between the regulation, the provisions of this regulation, and the provisions of the Mainstream Tax Administration Act. Nano businesses are also exempted from the presumptive tax regulation. And the list of nano business can be obtained under, I think, Schedule 1 of the regulation. I'm saying this just to give a highlight. I know the regulation is not publicly available, but I know before 1st January, this will be made available to the public. There are also businesses under the regulation that will be subject to tax at 0 rate, just the way we have 0 rate under the gratuity tax table for individuals under Section 56 and 4th Schedule of the NTA. So under the regulation, we also have nano businesses that are exempted, and we also have some businesses that are also 0 rated. All these are going to be made available for public to consume and also to be able to decide where their businesses fall. The regulation also empowers the Revenue Authority to issue exemption certificates to these taxable individuals that are exempted. These exemption certificates will mimic what we'll have as the tax clearance certificate. This is just to show the public that a particular business is exempted from the payment of presumptive tax, which will also double as an exemption under Section 163 of the NTA. So you can see in summary that the presumptive tax regulation, alongside the relevant provisions of the Nigerian Tax Administration Act, have provided a lot of incentive for businesses to grow. And this is in line with the entire philosophy of the reform, which is actually, as mentioned by my brother during the presentation, is to tax prosperity, not poverty, is to tax the fruit, not the seed. So in line with all this philosophy, the Nigerian Tax Administration Act under Section 15, under Section 29, and the regulation that have been developed are actually providing a booster to businesses to grow, are providing a base for businesses to compete globally. There are also areas, the rates, sorry, I have to touch on the rates of the presumptive tax. Based on the regulation, we have 1% for businesses that qualify to be assessed under presumptive tax regulation, 1% of their deemed turnover or estimated turnover. If you have a turnover of 15 million, 1% of that, I think that will be around 15,000 or 150,000 naira. That is what that business is going to pay as tax for a particular year. If you have 20 million, 1% of 20 million, I think is 200,000. That is what you are going to pay, as tax in a particular year. So we also have regulation for chargeable gains under the same regulation. During the presentation, my brother highlighted how chargeable gains are now going to be administered under the new law, which is going to be under the total income to be subjected to taxation. If there's a company, you have the range of 0 up to 25% or 30%, depending on whether we have a recommendation from NEC, which will make it 25%. If you are an individual, you have from 7% up to 25%, depending on how your income bracket is. So under the presumptive tax regime, because you are neither under the Section 56 or 4th schedule of the NTA or under the company income tax competition, you fall under the presumptive tax. The chargeable gain that you have from the disposal of your asset will be subjected to 2% to arrive at chargeable gain that you are going to be paying to the relevant tax authority. This also depends on whether you are going to be paying to subnational or the central government, which is to the NIRS. So in summary, this is the regulations or the provision contained under presumptive tax regulation, which, as I said, is going to be made available to the public before 1st January. So this is one of the slides I need to add some flesh to. The second one is under the harmonization of taxes. He mentioned that one of the objectives of this reform is to reduce the number of revenue heads to the barest minimum. The Presidential Committee, alongside the JRB Joint Revenue Board, have also worked closely to come up with the new taxes and approved list of collection, which attempts to achieve the minimum number of revenue heads, that will be made available to Nigerians to pay on. And from what has been circulated to all the subnationals, we're able to achieve a minimum of 8 revenue streams between the state and local government. More than 60 revenue lines, or 100 if I'm not mistaken, that are currently available have been streamlined, have been streamed into about 8, which is further reduction, further incentive and concession to all Nigerians, which will allow businesses to grow, as I've mentioned, which is going to be further incentive for business to compete globally. Today, we don't longer have the stickers that, has been a nuisance, a kind of frustrating tax across Nigeria, across all the subnationals. Emphasis on roadblock has also been emphasized. There shouldn't be any roadblock between Kano to Lagos or between Port Harcourt to Maiduguri, with punitive measures to punish any revenue authority or revenue officer that is erected some of these roadblocks along the Nigeria routes. The haulage fee, loading and offloading, has also been streamlined into one revenue head. And I know a particular rate is going to be made available to public, which is going to be a harmonized rate. Whatever you pay in Lagos is what you are going to pay in Kano, or what you are going to pay in Maiduguri, which will make life easier for our commuters and motorists across Nigeria. We also have a streamlined revenue for transactional fees that are obtainable between the state and the local government. They are now being harmonized under one revenue head. This is to further, reduce the burden on all the taxpayers that are paying maybe transactional fees or charges in government offices and MDAs. So I think this is what I have to add to all the presentation. As I have said, he has, I think, done justice to all the areas covered. And I'm happy to also, respond to any question or observation that will be raised by the audience. Thank you. Hello? Can anybody hear me?
Yes, we can hear you, Dr. Said. So thank you very much for those perspectives you put to it. I guess this time we open floor for Q&A. I guess so. If we have any other moderator, okay? I think
Yeah.
okay.
Yes. So
Chairman, go ahead.
thank you very much to both of you for the excellent session. The Secretariat has compiled some questions. I don't know whether they've sent them to you.
Not yet, sir.
Okay, so let me read a couple of them. There are quite many. So the first one is from Adesina Oluwatosin. Given that the tax ombuds offices will be established, okay, I think this one is for the previous session. So let me look for Abdurazak Busari. Say section 163 1B of NTA 2025 exempt dividend distributed by authorized collective investment scheme from tax, but says profits of CIS are to be regarded as dividend paid or payable to the unit holder and taxable on their hand. Mr. Idile is in one presentation who said all mutual funds are exempt unconditionally. Kindly clarify whether or not the individual investors is to pay tax on mutual fund gain. Okay, I think I can take this one since you referenced me. So my point about the mutual fund is to do with capital gains tax. Because mutual funds generally earn income that is already either exempt or on which withholding tax is final tax. So the treatment for a mutual fund would then be a function of the income that they earn, because it's not a blanket exemption for income tax purposes. So I'll probably suggest that this is something that you treat on a case-by-case basis to determine whether there's tax or not. I'm not very clear what your question is trying to clarify. The second one is Oluwaseun Olaleye. What is the exact position of Committee on CGT? That's not very clear because we don't have a position. There is the law that has merged CGT to CIT. So the one where we've been providing clarification has been CGT on capital market, because the market is very sensitive. So if you don't respond to misinformation, like we saw, the market lost 4.6 trillion in one day. So that means we couldn't wait. The ideal thing is to wait and write implementation guidelines and regulations, but we have to respond to the market to make sure that we don't create unnecessary panic. So on those, I can tell you what the position of the committee is, and that's something we've published already. For example, we said in trying not to apply the law retroactively, because if you have gains in your shares, as I speak to you today, and you bought the shares like 10 years ago, the gains you've made are still there. They'll be there by January if you haven't sold. Should we then tax you on all of that at the new tax rates? If we do that, then that's retroactive application. If you don't want to do that, then you have to do a reset. And there are countries where they've done similar thing before. So we believe that that can be done by regulation. You don't need to amend the law. You just need to demonstrate that you're not doing retroactive application of the law. And like I've said also many times, more than 99% of investors are exempted unconditionally because they don't have portfolio that is more than 150 million. And for the remaining investors that have more than 150 million, 50 million naira sales in a year, they are also eligible to exemption, just that there's a condition attached to it, which is that they have to reinvest within the same year of assessment. So you can sell in January, you don't need to pay the tax if you intend to reinvest before the end of December. Once you make that reinvestment, it's not even a rollover for those who may not be familiar with it. It's a permanent exemption. Once you reinvest, you are permanently exempted on the gains you have made, which is why some of us are of the view that the reform makes the Nigerian capital market even more attractive and more globally competitive. But many of our citizens just don't like, good news. So they'll find a way to spin everything into negativity. And many of our, citizens also like to believe those things. And then it drives their behavior. And then you end up with a problem that never existed and should not have existed in the first place. Esther Udoete says, please, there is need for clarification. Is it the first 800,000 that is tax, not first 840,000 again? Please, this is confusing. I think that the presenter already explained this very well. You have your gross income or gross salary. That's the amount you're paid. If somebody is earning national minimum wage, their gross salary is 840,000 naira. You don't take gross salary and start applying the tax table to it. That is why the tax table does not talk about gross salary. It talks about taxable income. So which means you have to adjust your gross salary first and foremost to arrive at taxable income before you apply the tax table. And that adjustment requires that you do two major things. Number one is you take out statutory deductions, and there are 5 of them. You have pension contribution, National Housing Fund, National Health Insurance Scheme, mortgage interest for owner-occupied property, as well as insurance on your life and the life of your spouse. When you take out all of these, then you take out rent relief allowance, which is 20% of the rent you pay, not more than 500,000 naira. When you take out these, the balance you have is called taxable income. Then the first 800,000 naira, you apply 0%. So for 2 reasons. Number one is just what I've just explained now means anyone, even if the only thing you're doing is just making pension contribution, which for individuals is about 8%. NHF is about 2.5% of basic. By the time you do those things, you already have taken 40, 50,000 out of the minimum wage that you earn. By the time you add rent to it, so the person that is earning minimum wage will not pay any tax. Plus, there's a specific provision in the new tax law that says national minimum wage should not be taxed. So in other words, even if national minimum wage is increased today to 200,000 naira a month, automatically that amount is also exempted from tax. So this law was designed purposely to protect our lowest income earner. Because of the statutory deductions and the rent relief allowance, ordinarily you easily find somebody who is earning up to 100,000 naira not even paying any tax at all. So we have the tax calculator that people can use to have an idea of how this would impact on them. And for small businesses, you can even be using that calculator to calculate the tax you remit for your employees if you don't have the knowledge to do the calculation yourself and you cannot hire an accountant to help you. Mutiu Yisa says, is rent relief the higher of 20% of gross income or 500,000 naira? Is it an automatic relief for all or must be supported by rent payment evidence? I think I just said that, and the presenter also said that as well. It is the rent you pay. The rent you pay multiplied by 20%, but not more than 500,000. If your rent is 1 million naira, 20% of 1 million naira is 200,000. You can claim 200,000. If your rent is 10 million naira, 20% of 10 million naira is 2 million naira. 2 million naira is more than 500,000. So that person will claim 500,000 naira. So it's the higher of your actual rent times 20%, not gross or rent, not more than 500,000, because the incentive was not designed for rich people, because some people say, even one room in Lagos, is more than that. It was not designed for people who pay 10, 25 million in rent. It was meant to take care of the urban poor, because the urban poor are the people who are the most vulnerable in society. First, they earn very low income, and they still have to commit to work, and they still have to pay rent. When people are poor in the village, more often than not, they trek to where they do their work. They live in houses, maybe grandparents or friends, they hardly pay rent. So it's to a little bit support and pushing the impact on the urban poor. So therefore, it means that the relief is not automatic. You need to provide evidence that you pay the rent. So if you are not paying rent, you will not get that relief. Olarewaju Agoro, the rent relief of 20%, please clarify. I guess it is 20% of rent paid. Okay, I think we just addressed that. Abiodun Olawumi, under the tax relief, rent allowance, what about the house owner? Yeah, house owner doesn't pay rent, so won't get it. Okay, Mifuna, my question is, do small businesses pay the development levy, or are they exempt from it? Small businesses are exempt because the small companies don't pay CIT, so they also don't pay development levy, which is based on accessible profits. Nnaemeka, on what FS line item is the 4% earmark tax charge? I guess this person is referring to 4% development levy is based on the accessible profit, like tertiary education tax. Sumola David, hello, I need clarification. Under the current tax reform, it is my understanding that companies with a turnover 100 million are not mandatorily required to collect VAT and withholding tax. On behalf of the government, does this exemption also apply to registered businesses, or are they still required? So whether it's registered business, whether it's limited liability, the exemption for VAT and withholding tax is applicable to all the small businesses. The only distinction between limited and registered or unregistered is corporate income tax. If you are registered as a limited company, your corporate income tax is 0%. If you are not registered as a limited liability company, you don't pay CIT, you pay personal income tax. After you have deducted all your expenses and your allowances. Like Dr. Zaid said, I've heard a lot of the misinformation where they'll say Baba Bolu, Mama Nkechi, Oga Musa, he's a vulcanizer, he's a hairdresser, and then earns income of 10,000 naira, a day, works 20 days a week, that's 200K. So at the end of the year, 2.4, would you now be taxing Oga Musa? So people don't realize that when you are doing business, as a sole trader, artisan, petty trade, the money you earn is not the equivalent of a salary, because the money you earn is gross income, and it has cost of sales, it has overheads, it has even sometimes capital expenditure. Somebody bought a laptop to do their business. They have a car to do their business. Those are assets on which you claim capital allowances. Like any business, you deduct all of those before you arrive at your net profit. So that's the reason why in the presumptive tax regulation, the plan is to exempt any business whose income is not more than 12 million in a year. Because that 12 million is not money in their bank account that they can spend. That's just their turnover. So whether you're talking about vulcanizers, corn roaster by the roadside, some people are just there to try and shine shoes, cart pushers. Those people don't make a lot of money from their business, so, and therefore they should be exempted from income tax. This is one of the reasons why sometimes we find it really heartbreaking that all these reforms are designed for once to help the masses. And then some people are fighting it. It's totally unbelievable. Because at the end of the day, we hope they don't succeed. If they do, just imagine what that means. People just continue with business as usual. Many people don't know the implication of saying no to a reform. When you say no to a reform, you are saying yes to the status quo. And the status quo is not helping us. It's not helping anyone, particularly our vulnerable population, low-income earners, small businesses, artisans. They're struggling. We put too much burden on them, and we need to address that. I was at the session today for Lagos State. Lagos State have their implementation summit, and their governor was there, and they're committed to fix. Just imagine Lagos State fixing these problems of taxes left, right, and center. Imagine fixing it also in the FCT. Kano has, worked on their harmonization law. Ekiti State, we've seen Zamfara State, we've seen Anambra State. This kind of progress, I haven't seen it in my professional life in Nigeria. So instead of all of us to work together and make this progress complete for our people, I'm spending more than half of my time every day just fighting misinformation that is totally not necessary. So we're hoping that professionals on this call, we have over 900 people on this call. So you can also, in your own little way, just help us educate people. We are not asking you to go and be selling and promoting the reform, but just help educate people correctly so that this level of misinformation would reduce. Odun Ayo Ajayi, if I file a company's financial of 2023 and 2024 in 2026, will the old tax law apply? Because the period you are filing is a period before the new tax law kicked in. So whenever you are filing that, you apply the old tax laws. Benga Hussein, on capital gains tax, we gains on revaluation of asset be taxed? No. So for tax purposes, revaluation gains and losses are considered to be unrealized. Abdul Lahad Musa, my question from today's session, is it that we don't have anything like tertiary education tax anymore? The answer is yes. No more tertiary education tax, no more NASENI, no more NIDA levy as well, and no more police tax. We now just have development levy. What is the wisdom behind increasing CGT to 30%? What's the wisdom? CGT is not increased to 30%. CGT, what the tax reform law did is CGT rate has been removed. So before, CGT has a standard rate of 10%. The new law removes that rate and says that CGT should take the life of the income tax of the payer. So what does that mean? If you are a low income earner and you have CGT and you are exempted, your PIT rate is 0%, your CGT rate will also be 0%. If your effective PIT rate is 3%, your CGT rate would also be 3%. So what we have done is to make CGT progressive, just like personal income tax, because capital gains tax is actually income. That's why when you see double tax treaty, it's taxation of income and capital gains. In many countries, they've merged these things together a long time ago. Nigeria is one of the few countries where you still have capital gains as a separate law from income tax. So the narrative that they increase CGT to 30% is not correct. It is that the rate of CGT has been removed and CGT has been merged with income tax to take the rate of the payer, whatever band they fall into. If the person earning the capital gains is a company, if that company is a small company, their CIT is 0%, their CGT would also be 0%. If that company is a large company, their CIT is 30%, then they pay 30% CGT. The plan is to reduce the CIT rate to 25%. When that happens, then their CGT will be 25%. Additional Oluwatosin, thank you for the insightful presentation. However, Section 57(2)(b) provides for a turnover threshold of 20 billion for the application of the 50% effective tax rate. I think Femi Olayinde can take this one, so I'm not taking questions again. Let me read it again.
Okay, I
Thank
think
you.
I have the questions now.
Okay. Please go ahead so I can
Oh,
rest
okay.
again.
Well, depending, I don't know who brought that. The law you probably is written. You are reading. You are not reading another version of the law. It's not the effective tax rate. It's not 20. It's not 20 billion. It's 50. Please, you can visit the website of the Presidential Fiscal Policy and Tax Reform Committee for the version of the law that that is the right version for now. That is the right version. So that's where you see that. Let me take the other questions. There are so many questions. Maybe okay, we still have some time. Chairman, what question did you stop, please, so that I can? Okay, I think Joel or Gaga, does it mean, okay, you've taken all those ones. Monday, Orishamaki. Okay, this has been taken too. How does the, okay, 24. Okay, Abiodun Salami, if a company classifies itself as a small, as it makes a monthly turnover of 55 million, and as a result, it does not file VAT, assuming it makes a bumper sale at the end of the year that pushes its turnover beyond 100 million, what will happen as it's not filing VAT? So, yeah, you don't have the obligation to file until you have exceeded the 100 million, or you expect to exceed. So what the law, so you don't have that obligation, even if at the end of the year you attain that 100 million. When your obligation starts is when you have exceeded it. So just be clear, don't bother, nobody will charge you for those time you have not collected from January to, let's say it's only even December that you exceeded it. No, you will not be liable. So be clear. Moe Clifford say my question is, for businesses that has more than one branch, will each of the branches be considered in VAT consideration remittances? So VAT is centralized, please. So for businesses that have more than one branch, what the law says is you provide an attribution schedule. So you remit your VAT centrally, but provide a schedule that shows where this VAT consumption has been done, where this VAT is collected. So from all your branches, you need to show how these VAT were collected. So if you if your headquarters is in Lagos, like what obtains many times, and you have branches all over Nigeria, when you're remitting the VAT, you should provide a schedule that shows what is due from whichever location. Abubakar Baba on VAT filing. Currently, small businesses are exempted from VAT filing, but still FRS requires this small business to file on Tax Pro Max. No, to file. So what FRS expects you to file is not VAT. It's your CIT, and that is on annual basis and not the monthly filing. So for small business who are exempted, they are not exempted from filing CIT today, income tax. So that's the only way anyone would know that such business is even small, because it's the records that will show they are small. Joseph Agbo, please help answer the following. He says, in small business are exempt from VAT from obligation part, including what are procedure for claiming the input VAT on overheads. Okay. So if they are exempt, of course, they have no, they may not be able to claim in that manner, except it's zero rates, except they deal in zero rated items. So that is one of the reasons, again, when I said for VAT, for small businesses that have been given exemption, they may opt to actually comply by collecting. And so they have that opportunities to make all these claims. So these are some of the, so this law is a very self-regulating. And so if such small business, it helps them to able to recoup if they so wish. It says, so small business name, sole proprietor qualify as small business if their turnover is below yes, they qualify. However, it's for that purpose, for VAT, you already asked for VAT. Yes, they qualify if their turnover is below 100, does not exceed 100 million. Bukola Abdul, he said, on zero rated list, I saw that agricultural products are listed, but the processing of these agricultural products are not zero rated. The only one I saw on the list was processing of cocoa. What about other cash products like palms, oil, palm kernel, and the rest? So I need to be clear what you mean because of list of products. However, you already explained what zero rating means, and it says basic food. And so for such basic food, you can claim. Joshua Adinze, how do we treat VAT for NGO that manages funds from multilateral organization? VAT on humanitarian goods purchased for goods humanitarian is exempt. So it's outrightly exempt. So it's exemption that is provided for that. It's not zero rated, it's exempt. Bola and Samuel Toriola say looking for a personal income tax. Looking at personal income tax in the current regime, we see one or two states handling PIT of expatriates differently from that of local staff, to the extent that Lagos make use of deemed income for expatriates. What is the position of the tax reform? Well, incomes are supposed, that's why we say taxation is on the strength of documentation. It's expected that the taxpayer provide as much information to substantiate their claim. I believe the only time there will be need for DIM is when there is no sufficient evidence to that respect, and if such cannot provide enough documentation to support their claim. So I will say the position of the tax reform describes what constitutes an income, and as such can only be substantiated by the documentation. However, the tax authority have powers to deem some certain income that is they too having evidence, because they will also have intelligence to also substantiate why they have also deemed such income. And so that should be cleared. I said the news dropped today that NIN will replace tax ID. What is the reality about it? Like I said earlier, the concept of the tax ID is to ensure Nigerians have a common and unified identifier. And so the NIN, yes, like has been said, is a valid tax ID. Is going to be. And also we said the CAC number for companies. And so this is in line with the reform. Rent relief of 20% annual rent. Is it annual? Okay, this has been explained. And okay, I have the following question. With respect to foreign mission, are there legal or compliance requirement changes under the NTA or diplomatic missions who employs local staff? Can foreign mission have a practice of self-filing of personal income tax for local Nigerian staff without being bound by requirement to withhold taxes, deduct from the source of to integrate payroll? Okay, I guess. Okay, say there are instances where foreign missions under NTA can be considered liable jointly for its local employees' failure to remit personal. So the law, for me, the law specifies employer and the obligation of an employer to his employee to tax authority in respect to income of his to income of its employees rather. And it is clear that such income should be charged, and this is under the payee scheme and remitted to the tax authority. So this is a very blanket provision, and which every employer is subject to. I think these are all the questions we have. We have taken almost 30 questions. I guess if any Dr. Zaid, if you have any contribution or the chairman still want to make further clarification, I rest at this point. Hello, is anybody? Secretariat, maybe chairman. Is chairman still on the call? Hello? Hello? Can anyone hear me?
Yes, we can hear you. Are you done with the
Okay.
questions?
Okay, yeah, we're done. Done with the question. So,
Okay. Just 1 second. Let me call you back. Okay, so thank you, everyone, for joining today's class, and thank you to our facilitators for that very extensive and robust conversation that they were able to share with us. This session completes the module 1 of our training. But for the sake of those who may have missed it, I want to share with you the QR code that you need to remember and use regularly, because that's the QR code. Okay, so hopefully you can see the QR code to the left. You don't need to worry about the scenario discussion. That was what we used, I think, yesterday. So from this QR code, you find more information there. The assessments for this module 1, because we'll do assessments, is, let me see if I can find the dates, just to give you an idea. Okay, I don't want to give you a wrong date, but I think the assessment is probably next week, because we're hoping to complete this module 1 before the end of the year. So the right, I think it's Saturday 27th. So that's Saturday this week, to have the assessment. But we'll communicate to you and send you messages. But if you also remember to constantly use this QR code to see any updated information, you may even find the information there. So the assessments would be online, multiple choice, including scenarios, but you also have short answer questions so that the system can also do the assessment almost immediately, just to ensure that, one, you attended the classes, two, and that you pick the knowledge that you're supposed to have. And then we'll communicate when module 2 would start, and that will be in the new year. So we give you some time to rest and enjoy the holiday before we continue with the training. So it's already 7 o'clock. Thank you everyone for attending. It's not 7, I think it's just 2 minutes to 7. Thank you for attending the training. Do enjoy the rest of the week ahead. Happy holidays and see you next time. But please watch out for the assessment. Thank you very much.